Welcome back. Alphabet announced their earnings today, and it was an impressive report. I was able to listen to it, and I really liked a lot of things that I heard. They also provided new financial statements. With the new data, I'm able to update my valuation for Alphabet and see if it's a good stock for me to buy more shares, hold my shares, or sell my shares in Alphabet. Let me start off by saying that as I listened to the earnings call, every business was really clicking. They led off with a lot of AI discussion, as you would expect. AI is super hot, but Google really does have a lot of AI, and they have it. They just didn't come out and show it off very early. And the AI I'm talking about is obviously like Bard that you can get access to as an individual, AI that they're providing for other businesses, but their Waymo, their rideshare service, they already have a self-driving taxi service. That's live. They've been working on Waymo for like 15 years, and it is ready for prime time. You move over to their search, and of course, search is what makes Alphabet so valuable. It grew. Overall, the business grew. And you look at YouTube, which you're on right now, it grew very well. And what's growing very quickly is the paid, more like television based YouTube. Their partnership with the NFL, where they provide Sunday ticket, that's doing really well. In short, the Google business, the Alphabet business is doing really well. And I'd like to get into their earnings, go over their earnings report, and update my valuation on Alphabet and make a decision whether I should buy more shares, hold, or sell my shares. So for the third quarter of 2023, the earnings were great. They grew 11%. If you look at revenue for the third quarter of 23 compared to the third quarter of 2022, just excellent growth. For the quarter, they generated almost $77 billion of revenue. Incredible. And they expanded their margins at the same time, going from 25% to 28%. Dissecting that revenue across the different businesses, Google search really grew well. It always does. It's the big monster in the world for online advertising, along with Meta. And you look at their YouTube, it grew very well. Their Google network did go down in revenue quite a bit, but their Google Cloud really grew. I think is in 20% plus growth in Google Cloud. What I like is that obviously their Google search is the big, cash cow of the company, which is great. But they're really growing into other businesses. YouTube keeps growing. They're growing their Google network. They're growing their Google Cloud. The Waymo ride sharing service is off the ground. So they have these businesses that are really beginning to click and bringing in good profit, growing the top line. All those things look really good. So it's impressive that Google's grown so big. They're up to $221 billion in revenue for the first 9 months of 2023. But what's also super impressive is the profitability of the company. They had $53 billion of profit, or $4.19 per share. So total cash equivalents, or marketable securities, it went up from 113.7 billion up to roughly 120 billion dollars. So what would be the market cap for a fairly large company, let's call it an Airbnb, that's how much cash Google Alphabet has on their balance sheet. Just a real big treasure chest of capital that they can use to grow the business, to acquire other companies. Right now, we're seeing a lot of small caps sell off. Maybe Alphabet could acquire one or two of those that'll make their business stronger. So they just have a lot of things they can do with their balance sheet. The statement of cash flows looks really good for Alphabet. For the first 9 months of 2023, the company generated $82.8 billion of cash flow from operations, and they spent $21.2 billion on capital expenditures. So I'm going to take these two numbers and use that as my run rate for my valuation. I'm going to annualize the number, but you could see that this company just generates tremendous free cash flow. And that's what makes this company one of the most valuable companies in the world. Based on the numbers that I got today in their financial statements, I believe that Google is discounted by 19%. I believe that each share is really worth about $160 to $7 per share. But as of the end of the market close, they were trading at $140.12. So it offers up about a 19% discount. I get there by taking free cash flows and valuing the company based on all the free cash flows I expect from Alphabet. And I look at their earnings per share, my expected earnings per share, and discount all the earnings per share that I expect in the future into today's value as well. Looking at free cash flow first, the run rate that I'm going to use, I'm going to take the first 9 months and then annualize it, which would be, take 9 months divided by 9 and then multiply times 12. And I get to an $82.1 billion free cash flow number that I'm expecting Google is going to produce in 2023. I'm going to grow those numbers by 8%. As I showed you, the company's growing at 11%. So that's a comfortable number for me. Beyond year 4, I'm going to grow at 4%. And that's going to help me determine terminal value, all cash flows after year 4. And that's $2.69 trillion of cash flow that we're going to see from Alphabet in the future. I'm going to discount Alphabet, even though it's an awesome company with an awesome balance sheet. Interest rates are really climbing. So I actually increased my weighted average cost of capital by 0.5% or 50 basis points, as they would say online. And I discount with an 8% rate, and I get to a net present value of all those free cash flows of $2.13 trillion. I'm going to add the I'm going to add the cash on the balance sheet, but take away the debt on the balance sheet, and I get to $2.2 trillion is the value that I believe Google is worth. Based on the market cap that they currently have, it offers up a 25% discount on Google stock. Looking at earnings per share, I expect will be at $5.59 for the year. And the PE of 28 is very reasonable. This is one of the best run companies anywhere. And I'm going to grow them at 8% per year. It can grow quite quicker, because as they mature, I think they're going to become more profitable. But 8% is a good number to go with. Based on those numbers and discounting all the earnings per share in the future into today's value, it provides about a 7% discount using earnings per share. Combining the two, but putting more weight on the free cash flow method, I get to a 19% discount on Google. Looking at where Google has traded over the last 5 years, you can see that Google is a great opportunity. You could have bought shares in Google at probably in the mid 50s in 2019. And today the stock's trading at $140 per share. So over the last 5 years, you would have been up 61%. Year to date, the stock is up 56%, just doing phenomenally. It's just doing a great job. And it has a nice consistent upward rise, which has been a really nice thing to see. I think from the Magnificent 7 stocks, this is one of them, this one was kind of slow to get out of the gate, but has recently really just been a consistent riser, because I think they just have all the right businesses. Obviously, their search business is incredible and really is a monopoly on search. But their YouTube business is phenomenal, growing just at a great rate. Their cloud business is doing great. Their Waymo business is getting off the ground. Just business after business is doing really well. And the AI business is going to be very big. So you put all those things together, and that's why investors are coming into Alphabet and buying shares of this valuable company. So there are 4 questions that I ask myself about a stock, whether I decide whether I'm going to buy more shares, hold, or sell shares. The first question is, do I want to be part owner and I want to be part of the industry? And for Alphabet, the answer is absolutely. Just a great business, great industry. The company is being run by one of the best management teams in the world. And that's the second question, is the company being well operated by the management team? So absolutely. Debt needs to be less than 3 times EBITDA. I want a clean balance sheet. I don't want a big problem company that has a bunch of debt that's going to have problems persist and really keep the company down. And it's the opposite for Alphabet. They have excess cash, which is really capital to grow the business, capital to acquire other businesses. So the balance sheet is A++ or triple A. Put as many A's as you'd like to put on that balance sheet. And it provides a 19% discount, not the biggest discount you'll ever receive on a stock, but I like to follow the rule that Warren Buffett says, which is it's far better to get a fair price on a great company than to get a great price on a fair company. And this is about as good a company as I could buy. So the discount of 19% seems reasonable. So across the board, I really like the answer to all 4 questions. So I'm going to be buying more shares of Google, Alphabet. I tend to buy shares on down days. And what's interesting is the stock is down in after hours trading. And if it stays down, I'll be buying shares tomorrow. So that's my video on Alphabet. Hope you enjoyed it. Alphabet's a great company, and I'm glad that I've been an investor for a while. And I really like their products. I think they're brilliant people. I think it's a great company. And they generate just tremendous free cash flow, tremendous revenue growth, and profitability. Do me a big favor and like my video, subscribe to my channel, and leave comments on Alphabet. Let me know what you think of the company. I'd love to hear that. And any other ideas that you have on both Alphabet as well as other companies that you think are worth investing in. Thanks for watching. Good luck investing in 2023.